and you can clearly tell as well that things aren't necessarily going as hoped as well on this market picture. A bit of a mixed one then, with particularly out on the market front, on the Asian market front in particular, a bit of a mixed bag in Hang Seng and the Shanghai Composite there in Hong Kong and China. But the Nikkei in Japan going up 1 8/10%, so a much better picture on that front to close off trading. Negativity though across the board when it comes to the European market. The main indices there going down 1 1/10% for the FTSE 100 out in London, 1/4% weaker for the CAC 40 in France. On the local front as well, 0.2% down unfortunately for the JSE All Share. It still does sit above 57,000 points though at 57,303 on that front. The biggest losers for the day seemingly being the gold miners, with industrials also going down 0.4%. Of course, the industrial market does take on quite a big chunk of our market here locally. The positives though, South Africa's listed sector going up ever so slightly, with financials up around 0.5%, boosted by the banking counters, which have edged a little bit higher. Of course, we saw news late on in trade yesterday where ABSA had noted that things are going to get bad for them. 85% drawdown when it comes to their earnings picture, with credit impairments or the losses that they expect to make from loans also set to rise by 4 times as well on that front. We'll unpack that information as well in a little bit as well. But overall though, down for the JSE All Share, 1/4% weaker. Taking in on again some of the companies that have fallen. City Lodge also taking a bit of a good stance as well today. They're nearly 27% higher for City Lodge, with Tsogo-san also going up. So as you can tell, some of the tourism companies perhaps picking up a little bit more hopes and more plans perhaps to get trading back to normal. PPC going down 4 8/10% there. Of course, that company putting out that rights issue, 1.25 billion rand that they're expected to perhaps put in when it comes to that rights issue. So hopefully things will get clearer on that side. Kumba Iron Ore down 3.25% as well. Onto the commodities market then. Brent crude is down 1/3%, while platinum and gold have managed to tick higher. Gold rather sitting just below that 2,000 point mark. Of course, now it seems normal for it to be sitting in and around that mark. In fact, sitting above 2,000 is where perhaps some would have thought. Platinum 1 8/10% to the good on that front. In the currencies, a little bit of strength for the South African currency, but not much to write home about. Still 17.42 against the US dollar. It's 20.64 for a euro, with a pound set to cost you 22 rand and 83 cents. Gerbrand Smith from NEFG joins us now as we get to unpack this market movement a little bit more. Gerbrand, the market's still awaiting that stimulus package then from the United States, as well as the fight, of course, between China and the US as well. That review of their trade deal coming through this weekend. A lot really to think about when it comes to this market picture.
Yeah, look, it's a tense battle at the moment. The bulls are winning with all the liquidity that's been pumped in by all the central banks on the global front. And yeah, the growth stocks are getting more expensive and the value stocks are getting more cheapish at the moment.
What's creating the cheekiness, I suppose, with the fall in the gold price? We saw that growth spurt and rise, the surge to nearly $2,100 a fine ounce. Now we're sitting at a 1933, so a big fall from its grace levels there as well. What's caused that?
Yeah, look, I think the dollar strengthened a little bit, and you saw the bond yields in the US ticked up a little bit. But the gold play is in line when interest rates are almost zero or negative globally. It's good to hold some gold because it's cheaper to hold it, and of course it's expecting to have inflation in not too distant future. So as long as interest rates are staying zero or negative in first world countries, gold will probably do okay. Bit of a pullback. You'll probably see the dollar getting weaker again, and you'll also see the bond yields in the US ticking lower again, and then you'll see gold picking up again. But until that changes and you hear central banks opting to maybe up interest rates, then it's probably time, or it was already time, to get out of your gold and our gold stocks. But at the moment, it's still a gold bull out there. It's working for the people who play that story. And I think it's probably a bit too early to get out, but the easy money has probably been made already.
Let's continue with that minerals or mining sector, if you want to call it that as well. We got mining data out a little bit earlier on today. Still, of course, a big fall there, massive 28% fall in that data. But then you also had numbers coming out of Exxaro. So a bit of an interesting picture when one looks to South Africa's mining sector. It's always been difficult, and clearly it continues to be so as well right now.
Yeah, look, Exxaro brought out decent numbers. They have an issue with Eskom and the Mpumalanga mines, and they weren't paid for some of their wind farms. But I think all in all, they own a chunk of Sishen iron ore, which did well with the iron ore prices. Okay, but they're getting that dividend from that side. But it's half iron ore play and half thermal coal. They did very well with their exports. We all know that they were actually producing a bit less over the COVID period, but they were open for essential services. So they actually, with the weaker rand, benefited them. So actually decent numbers. Don't know why it's down today. I would have actually expected it to go up. But yeah, the headline number shows a little bit of a drop, but the core earnings are actually, I think, 11% higher.
Should we be too worried, though, about the numbers in terms of production for mining overall for South Africa's economy, when the prices seem to be doing us a little bit of justice, of course, because, you know, the numbers don't look too bad because prices for iron ore, platinum, gold, all the like have certainly shot up.
Yeah, it just shows you, I think we handled, from a political stand, we handled the COVID situation a bit differently. So most other countries still kept most of their mines open. We were back to 50% in some of the platinum mines and the gold miners, etc. And you can see that in the numbers today. Still, they were allowed to operate in June with about 50% of their numbers, and we actually produced about 70%. So I don't think it's bad. I think there's still a chance of actually catching up for the year. But yes, there was production lost, unfortunately. But I think on the other side, we were looking after people's health and after some of the employees, which is also not a bad long-term story.
Let's very finally, just news that came out after market trade yesterday. ABSA putting out that earnings report, and really worrisome, 85% fall in earnings there. Do you think that's the worst of it? I mean, Standard Bank saying half their earnings down, ABSA pointing to even worse. Is that the true elements of the story, that banks are going to suffer?
Yeah, look, I think they're making provisions for bad credit impairments and so forth. So I don't think they've seen everything yet. So it's difficult to see or to estimate what the actual damage is going to be. But they are making provisions, and normally our banks are more conservative, so the provisions are bigger. We saw FirstRand as well coming out yesterday with full year numbers down, I think between 40 and 45. So that's also 81% down if you take the middle for the second half of the year. ABSA came out with between 80 and 85. So similar numbers. We would have expected FirstRand actually to do a bit better than ABSA. But yeah, similar numbers. But remember, it's only provisionally. And I think it was expected. They're still making, if you look at ABSA's numbers, they're still making just close to about R2 a share profit. So they're still not making losses. And I think if you look at what happened in GFC in 2008, maybe a 60 or 70% drawdown on headline earnings per share. So yeah, you would have expected a bit worse than what it was if you look at what the GDP contractions are, job losses are, etc. But yeah, it's still making profits, and in a year or two's time, you would have probably normalized some of these earnings, and you were sitting with very, very cheap shares at the moment. Nobody's touching them at the moment. They're almost at all-time lows in the last 12 months. They are half price of what they should be. We think it's a good entry point, some of these plays.
Sure. Gerbrand, appreciate the time though. Thank you so much for that update. Then that market picture certainly mixed and a whole lot happening. COVID-19 still bound to make quite a few inroads in this market picture. That brings things to an end then for me here on Point. Of course, I'll be back again tomorrow at 12 p.m. Do join us for that. For now though, my colleagues Mbongeni Mutwa do join you right after this for